Let's bring on board Mr. Pratip Chaudhuri, CMD at SBI then. Mr. Chaudhuri, hi, morning. Does the recent slump in the GDP growth signal lower credit expansion for the banking sector? And what is the credit growth that SBI is looking at?
Aggregate credit growth normally, should see a dip in the growth. But what is happening is that some of the credit growth which was overseas is now coming back to domestic. So the credit growth in India is not a function of the economic growth here itself. It also is a function of how big the other markets are, particularly the short-term ECB market and the bond market. Now the short-term ECB market proving to be less attractive and the bond market also almost given up for dead as present. So I think there would still be opportunities for credit growth, and currently our credit is running 22% year on year.
Morning, Mr. Chaudhuri. Let me have a follow-up question which is related to growth. And historically, every time growth has plunged, NPA or NPA concerns have only gone up. What is your understanding? Do you think with the poor growth, book quality in the short term could suffer?
See, asset quality I'll break up into two parts, and the most of the asset quality deterioration for SBI has happened on projects under implementation. Construction, they are not being able to keep up the timelines with regard because of environmental clearances and fuel supply, etc., etc. So that would continue as before, depending on how fast the clearances come. But yes, if the growth opportunities or the growth prospects become low, I do not think it affects the debt market as much as it affects the equity markets. Because in our understanding, the equity market participants give a price earning multiple depending on the growth prospect. But in the debt market, we are more concerned about their ability to service the debt. In our case, there are many companies where the share prices have fallen by a third or by half, but their interest cover for the loan remains intact. So they still continue to be good credit. So that is why I don't see a direct correlation. But of course, for new projects, yes, this would mean that there would be fewer new projects looking for finance.
And are there any clear signs of on-ground activity picking up? Are you seeing any revival or progress in stalled projects?
No, I think this has been a remarkable step, and I cannot thank the finance minister enough. He held meetings in 5 cities, because before that, the stall projects were such a discredited sector that anybody touching that, either the promoters, entrepreneurs or the banks, were looked upon as thieves. So now FM's meeting has given respectability that this is not, stealing money, but this is trying to put up economic value. And that, I think, has lent respectability, and it has given us great encouragement to go about restructuring or rephasing the stalled projects. But to what extent the fuel supplies would come in or the environmental clearances have come in, that information would reside more with the project promoters. But I think he has lent a lot of respectability to reviving stalled projects. Otherwise, the entire cacophony was that it's a big national loot, and anybody trying to do that is possibly a villain.
What is your view on the rupee, and do you think that rupee could stabilize anytime soon, given the recent measures which have been announced by Reserve Bank of India, where they have allowed PSU oil companies to do forex swap?
Not particularly, because I think it is a function of demand and supply. So in the rupee, apart from the trade part, there is a considerable capital part. So if the institutional investors in equities or debt come back in a big way, which improves the supply, that would lead to strengthening of the rupee. But if they do not come, or if they exit, then of course the downward pressure on rupee would be there. But the silver lining I see is a surge or an increase in confidence among the exporting community. Already you have seen that the software company shares have gone up, they are getting higher multiples, and they are being regarded as stars of India. I think a similar treatment, a similar approach needs to be taken for the exporters, that they are very useful citizens, they are very useful for the economy, and let the ecosystem all around that export be supportive of the exports, and that would bring in long-term sustainable supply of dollars.
Do you feel, Mr. Chaudhuri, interest rates will continue to remain high over the next 6 months? And when do you really see the RBI reversing its liquidity tightening steps, if at all?
So RBI, I think, compared to the foreign currency market, where RBI can, slightly control the supply, but not the demand. But in the interest rate market, RBI is the sole monarch. So interest rate will go where RBI wants them to go. But earlier we thought that these measures are temporary, but they came in 15th of July. So now 6 weeks are over. They have not been reversed. So we are preparing ourselves for a longer term inverse yield curve, wherein the short term rates are high and the long term rates have not gone up to that extent.
So how much longer can State Bank of India hold out on the rates front? And how much has your cost of funds moved, and could there also be a movement as far as base rate hike is concerned?
We are not contemplating at the moment, because our August, net interest income results, which we will receive in a couple of days, and we'll review and then take a view on the base rate. But as I have already said, that the bank funding costs are dependent more on the deposit pricing. Now, we do not have a single penny of wholesale funding, so we are not at all affected by the increase at the short-term prices. So that's why we are holding on, and we are holding on successfully to the lending rate. But it has given us a huge competitive advantage, particularly in two areas. One is the top-rung corporate banking market, AAA and AA. We have become the banker of first choice. And the home loan market, where our rate of 9.95% is absolutely the market beater.
So how is the asset quality shaping up when it comes to retail, SME as well as agri sectors?
I think the June was a big shocker, but in the month of July and August we are seeing some improvement. But agriculture particularly has shown some improvement because of the good rainfall in most parts of the country, and particularly 4 states which are key, Karnataka, Tamil Nadu, Andhra and Maharashtra, which though may not account for a large amount of food grains output, but account for a bulk of our agricultural lending. So there we are seeing a revival of interest and revival of agriculture activity and improvement in the repayment record.
But you've indicated that one of your subsidiaries would be merged very soon. Which one is on the anvil, and what is the progress on that, and by when and or how soon can we expect an announcement from SBI?
Yeah, we have made progress. The report of our Managing Director, Mr. Vishwanathan, has come in, and a discussion will be scheduled in the management committee this week itself. I do not think it is right to disclose more than that, because it is still not been discussed by the top management. It is more at the stage of ideas.
So what's the status of your capital raising plan? Are you looking at any amount from the government?
Not particularly, because we think that the current rate of surplus generation and looking to the slightly muted asset growth, I think our present levels of capital are adequate. But I think one thing that we are going to take up with RBI, that if a bank raises tier 2 capital abroad, now that country does not ask for CRR SLR. Now when we are raising tier 2 overseas, RBI still requires that you put up CRR SLR in India. Now I frankly do not understand the logic of it, because by raising funds abroad we are not preempting the funds in India. Then why should we ask for CRR SLR? At least the banks which can raise their tier 2 overseas should be allowed to do so, because RBI should also be supportive to the banks in terms of raising the capital. And I think this particular step would go a long way in augmenting the tier 2 capital of Indian banks.
Right, Mr. Chaudhuri, appreciate your time and thank you for joining us.